Welcome everybody, my name is 𝐏𝐸𝐬𝐬𝐬𝐿 and this is the Market Meditations podcast. We chat with fascinating people from around the world to extract mindsets, routines, stories and habits to help you build richer lives. Meditators, today we have with us Ryan, author of the Bankless newsletter. It's absolutely fantastic. He is on a mission to help build a bankless world, a world where people have control over their own wealth. It's amazing. You're really going to enjoy this episode. We even dive into Ethereum price predictions for 2021 and a lot more juicy stuff. Enjoy this episode. Before we jump into this episode, don't forget that I send hand-picked market news, insights, and education to over 6,000 traders and investors 3 times a week. To get access to this, all you have to do is sign up to 𝐿𝐸𝐴𝐾.substack.com. And also a quick thanks to our partners UTrust for making this podcast possible. There'll be more on them later. Meditators, welcome to another episode of the Market Meditations podcast. Today we have with us the author of the Bankless newsletter, another person who's got a fantastic newsletter in the crypto space with a slightly different tailored audience than ours, but fascinating nonetheless. I highly recommend you check it out. Thank you so much for joining us, Ryan.
It's great to be with you, Kurosh.
Well, it's an absolute pleasure to have you on. I actually had one of my team members show me your newsletter. And immediately I love how clear and concise the message was and the mission of the article. Very often with newsletters, it's rare that they have just one central point mission they're trying to push. And that is, if I'm correct, is Bankless. What does Bankless mean to you and why is it important?
So I think that Bankless is the reason all of us are in crypto. I know your audience is kind of very much, traders and entrepreneurs, people looking for opportunities in crypto. And the big opportunity I think crypto brings is the opportunity for people to gain back control over their wealth, over the banking system. So that's what going bankless actually means. There's a verb component of it. The first thing we started doing in crypto with the advent of Bitcoin was one verb. It was hold, right? Like you buy Bitcoin, you hold it. Sometimes you pay with it, but those use cases have kind of fallen by the wayside. Bitcoin as a digital store of value is the use case that remains predominant. But with DeFi, there are all of these other banking functions that we can start to do, other money verbs, as we kind of call it. So in addition to hold, you could start paying people with stable coins. We do a lot with Bankless and we have contractors, that sort of thing. Our medium of exchange is stable coins. It's not fiat anymore in the legacy banking system. You can also trade without a bank, basically use a Uniswap. You can take out loans using Compound. You can receive interest and there's money markets. So all of these various money verbs is what it means to go bankless. And you start to realize what a rent-seeking institution the banks actually are. So we like to say the world really doesn't need banks. We need banking, but we don't need banks. So the bankless journey and the exploration around everything we're doing with the newsletter and podcast is helping people on that journey start using the bankless money system more and more in crypto. Is really the journey. And there's kind of 2 milestones that we think people reach on the journey. The first is suddenly they realize they have more money, more net worth in the crypto system than they do in the legacy banking system. So that's kind of the first switch, right? The first flippening, if you will. The second is, and some Bankless members have kind of already graduated to this, they start doing more of their financial activity in crypto systems rather than their Wells Fargo bank account or their Bank of America or HSBC or whatever bank system they use. And that becomes their central locus point for Bankless activity, an Ethereum account. So those 2 flippenings are part of the journey too. And we just want to help people on that mission and kind of go westward with them because there's a lot of upside and there's a lot of reward, but I'm sure your listeners are familiar with all of the risks that come in this market too. So that's what Bankless is, and that's our sole focus.
Oh, I absolutely love it. And it's motivated me to do the same thing, help push people in that very specific direction. Because one of the reasons I love being involved in crypto is because I think it's a very, very positive change for the world. So having a career in this industry is just fantastic. It can help solve so many inefficiencies we have in our current financial infrastructure. You actually made so many points I want to dive deeper into, but I'm going to start with one of the early ones you said, that it gives people control of their wealth. Specifically, why do I need control of the wealth? Obviously, I want to control my own wealth, but what are the disadvantages? What current inefficiencies or actually atrocities do we see happen when people don't have control of their wealth?
Well, we could start on kind of the far side, the dark path, right? Of like what could happen. There have been periods of human history where governments tend to become more authoritarian and more violent. So having control over your own wealth is sort of a lifeboat against authoritarian regimes. And there are certain places of the world where I would argue that they're becoming more authoritarian and less democratic, right? So humanity needs a way to exist and do commerce outside of these regimes. Like the Central Bank of China shouldn't be able to lock all of its citizens from doing commerce if they dissent with the Chinese government, right? Same thing with the US or the UK. So there's this existential reason I think it makes sense to go bankless. But there's also this user experience reason. So the banking system today, the traditional banking system, sucks. I mean, I had to recently wire some funds somewhere, and I actually had to show up at my bank branch in the US in person, show them my state issued ID. It cost me $25 to send, and it wasn't going to send to the recipient for 24, 48 hours. I was wearing my Bankless shirt when I was doing this transaction, by the way. And it just struck me how people complain about the user experience of crypto and DeFi. But the fact of the matter is, if I want to send you some money, all I need is your crypto address, and I can do that in a matter of minutes. And the fees are cheap, and we don't have to know each other. We don't have to have a banking relationship. All I need is your crypto address, and I can send you those funds. So another reason to go bankless is I believe these systems give us superpowers, right? Like I can do things in DeFi that I have no ability to do in traditional finance. And then when I go back to traditional finance, I'm like, oh my God, this is the dark ages. It's like fax machines, right? When we had the internet.
What specific example could you give to expand on that point?
Well, I mean, the very first time I kind of fell in love with DeFi and crypto, decentralized finance, of course, and crypto, aside from kind of the Bitcoin rabbit hole and transitioning funds on the Ethereum rabbit hole, was probably when I took out a loan on Maker. So Maker is a collateralized debt protocol. So if you have some assets, say you have ETH as an asset, and say you have $1,000 of ETH as an asset, you can actually take a loan out against that ETH. It's a collateralized loan, so similar to a mortgage in that you have to have an asset in order to take out the loan. So it's not pure credit. But I remember doing this back in 2017, 2018 for the first time. And I was struck because I just taken out a mortgage on my house, and you would not believe the amount of paperwork and people involved in that process, right? It was like a multi-day affair. With Maker, I could take out a collateralized loan, almost like a mortgage on top of an asset that I owned, ETH, in a couple clicks. Like this is completely magic. There was no banking intermediary in between us. And without knowing Maker or any bankers on the other side, I did this with a money robot, with a protocol, right? So that's the kind of thing I'm talking about. the ability to trade any asset in the world on Uniswap. No one has to ask Uniswap's permission to get an asset listed. If I want to create an asset for a t-shirt that I'm selling, for instance, I can create a token and sell it to you on Uniswap and have access to a global market. And this stuff is just in its infancy, but it's already amazing. And DeFi users already have these kinds of superpowers. This is kind of like, we use the analogy often, it's about going west, right? So like, early America, there was this Western frontier, and there was all of this danger, but all of this opportunity. And crypto, Ethereum specifically, DeFi is very much like that. It's a complete blank space for opportunity, and it's just waiting for settlers to come over and set up shop and build towns and build entire economies. So massive opportunity there as well is another reason to go bankless.
I absolutely love how you've correlated the risk and danger and early stage of it to the massive upside potential and rewards that are in the industry. Now, personally, I've managed to run for the last 7 months a new company that I built, and we are 95% bankless, and I couldn't agree with you more. It's like I try to avoid the bank. It is such a headache. It is so annoying. The other day, our Revolut business account was locked up for like 30 days because we had a crypto transaction, and they didn't like that. So like,
wow.
it's no one should be able to do that with your assets, and that's the beauty of DeFi, which allows you to not go through stupid things like that. But also, the reason it got locked up for a few days is because there are regulations probably in place, rules in place to prevent previous terrible things we've seen happen, like the banking crisis in the past. So we have seen useless products and derivatives of derivatives get built on top of each other and result in a bubble, a bad financial system. Doesn't DeFi allow the exact same thing to be built? And therefore, aren't we really in early stages right now?
Yeah, I do think that there's something to look. We're not going to get away from speculation and bubbles in crypto, right? In fact, the birth of crypto has been through speculations. We're arguably in kind of our fourth speculative bubble, and I do think that this is going to be a bubble this time, as it was in 2017, as it was in 2013, 2014. So this industry works, in this kind of accelerated bubble, and then a crash, and then the crash is still at a higher point than the previous. And during this cycle, a lot of infrastructure gets built. But like your question as to whether we're just bringing the same old problems into a new system, I think is a good one. But there's lots of reason to be optimistic. One reason right now is DeFi doesn't even have the notion of credit, quite honestly. So all of the loans and the margin activity is all backed by collateral. Which is very interesting. So if something like a compound or an 𝐏𝐸, like you can see on the blockchain where all of the assets are that back these loans. So I think we're actually in a pretty decent place right now compared to sort of the traditional financial system. But the big reason I think that DeFi and crypto is an improvement is because it's all transparent. Mm-hmm. If you look at some of the bubbles we've seen in traditional markets, mortgage-backed securities, 2008, 2009, no one had any idea what was inside of these assets, like all of the crap and all of the garbage and all of the subprime mortgages that were rolled up into these assets. But with DeFi, you have the ability to right-click, view source on everything that's inside of an asset because it's fully transparent, it's on chain. So the maker example I was talking about earlier, right? I can see the backing of all of the loans that back DAI as a stablecoin, for instance, right? So complete transparency, complete visibility, open access for anybody. No, a Revolut can't deny services in this banking system. That's why I think this is a major overhaul and improvement to the world financial system.
Ryan, if I may, I can still go out in the food market or the supplement market and buy a fat loss supplement, take it believing I will lose fat, but I can also turn around the bottle and see that all the ingredients are listed there and it's absolute garbage and they're just selling me ground up celery and calling it a fat loss supplement. I can still do that, but the majority of people, it's not so much that they are unintelligent, but loads of people are ignorant in specific areas of knowledge. So most people are ignorant in the importance and functions of different ingredients in their food supplements, just like most people will be ignorant as to what open source means. So while it is more transparent, the reason I bring up the early stageness of it is because I also want us to move in this bankless direction, but I see so many obstacles, so many inefficiencies, and I struggle to imagine the clear path from where we are now to a truly bankless society. I mean, you've heard it multiple times. People really overestimate the speed at which these changes happen, but they underestimate the impact. And I think this might be a very similar situation, in which case, how far away are we?
Yeah, so there are times I think on this journey where I felt like, okay, this is all going to happen really fast. It's all coming next year, right? And there are other times I felt like, oh my God, this is decades away. But I will say I've been constantly surprised by the progress this space has made. I feel like we're in the early stages, but also right on the cusp of something big. I'm not sure if you remember when Uniswap launched. So that was 2018, and this is a decentralized finance trading protocol built on Ethereum. And at that time, it was just like kind of a goofy niche product, right? It was just a very simple automated market maker kind of exchange. It had barely any volume. Well, flash forward to 18 months later, 2020, it had daily volumes that exceeded Coinbase. Wow. This is Uniswap is a decentralized finance protocol that was built by like one guy. It was his first programming project ever, right? He did it on a budget of $80,000, right? And this small team of developers, he added some developers over time, was able to exceed the volume of a 1,500 person company in crypto that does move fast, right? So like that's how fast this sort of thing can move when you find the right product market fit for these technologies. And like the reason is simple. It's all about scalability. So Ethereum and DeFi allows you to scale money robots essentially that do really cool things with capital. So I guess maybe we're farther away on some use cases, like using crypto to buy coffee at Starbucks, right? We thought that would happen a lot earlier, but in other use cases, I'm completely blown away. If you asked me when a decentralized finance protocol would exceed the volume of Coinbase, if you asked that question in 2018, I would have said, I don't know, maybe 2025. And it just happened last year. So I think we'll constantly be surprised by the progress that this space makes in some of these areas.
That's a really valid point. It's almost like a luck element to it. As soon as the right thing gets made at the right time and finds its product market fit, it explodes, and we never know what could be found at the right moment. It's incredible. And the more people we get into the space, the more likely we are to get these really awesome ideas that push us forward. I'd like to push the conversation now in the direction of specifically Bitcoin as a store of value and the larger role Ethereum is starting to take in the market. And you said it earlier, Bitcoin really does serve one function really well right now, and that is being a store of value. It's both in theory and in practice proving to outperform assets like gold, the precious metals people normally like to use, and obviously way better than keeping anything in a savings account for a guaranteed loss. You quite strongly, I've seen, take the stance that Ethereum should have a larger percentage share of the total market cap. Could you expand on why you believe Ethereum should do so in relation to Bitcoin, and potentially touch on why it's also a store of value, because I've seen you say that as well?
Yeah, so first I'll say I am a Bitcoiner. I am bullish Bitcoin. Like, that is an asset that I hold, and I encourage other people to hold it as a crypto money. It's one of the core assets I think that should be part of a long-term crypto portfolio. So I'm Bitcoin bullish. But I do think, relative to Bitcoin and relative to any other asset that you buy, Ether, the asset, has massive upside potential. And if I'm bullish on Bitcoin, I'm probably like 5x more bullish on Ether as an asset, because I think it is massively underappreciated. What is somewhat appreciated, Karosh, is Ethereum, the network, right? So like Ethereum, the network, people see the traction, they see DeFi, they see stable coins. But what is consistently underrated is Ether as an asset that underpins this entire Ethereum economy. And I do think, as you said, it is a store of value in the same way that Bitcoin is, in the same but kind of a different way, right? So I think it's going to be very competitive. I think that there's basically a two-horse race right now for what asset is going to have the highest market cap from a store of value perspective, and that race is between Bitcoin and Ether, the asset. But largely, people don't understand Ether as an asset. So people don't they understand the meme of 21 million behind Bitcoin, like fixed supply, but they don't understand the issuance and monetary policy of Ether as an asset. What could be helpful is going through the roadmap of Ether, the asset, like in the next few years, and talk about how that evolves. Do you think we should do that?
That sounds very helpful. Yes, because in my mind, and I think a lot of our listeners, it's a little bit difficult to separate. We do have the huge value of Ethereum and what it does, but the actual asset ETH, sometimes I do struggle to understand why that even needs to have a continually rising value, or needs to serve as a store of value. And hopefully the roadmap can help shed some light on that.
Yeah, so I think the reason it needs to serve as a store of value is basically to secure the Ethereum network, in the same way that Bitcoin needs to have a high store of value and needs to be treated as a monetary asset, because its security is derived by the price of Bitcoin. The same is true for Ether and Ethereum. Ether as an asset on Ethereum has this really special property in that it is the only asset on Ethereum that is completely 100% trustless on Ethereum. That means if the Ethereum protocol works, and if the entire blockchain works, then Ether, the asset, will still continue to function. There's no other dependencies. When you port Bitcoin onto Ethereum, you wrap it, say wrap Bitcoin or something like that, you are introducing other dependencies. So some of those are centralized dependencies, like a BitGo, essentially a crypto bank, will wrap it. So if BitGo goes away, or if it's legislated against or something, then WBTC goes away on Ethereum, right? Ether as an asset doesn't have that property. It is purely trustless and decentralized. So it is, if you're trying to build money Legos or other assets on top of Ethereum, it is the base money building block, right? So if I want to create a synthetic of the S&P 500, and I want to essentially create an asset that trades against Apple shares or S&P 500 or something like that, I can use Ether as a store of value to back the value of that asset. So I can have Ether plus an Oracle, and I can create this great synthetic asset that can be traded on Ethereum. So that's why a store of value is important. But I think what's underrated is the issuance and monetary policy of Ether, right? So everyone knows the 21 million for Bitcoin. What they don't know for Ethereum is that it is what I call kind of a triple point asset, in that, first, it's kind of a store of value, so you can use it to invest in the same way as Ether and store of value. Second, it's a commodity to pay for gas, essentially. And then third, it's just become a capital asset. So with proof of stake and with like you have the ability to take some Ether and put it into a smart contract and bond it and receive yield on top of that, like yield of 5 to 10%. So it fits those three categories of being a triple point asset. It's capital, it's commodity, and it's also store of value. And I think what's really interesting is in 2020, we saw it become a capital asset. So with proof of stake, you can essentially stake Ether and generate returns on it in a fairly low risk way, at least low risk relative to anything else you can do with your Ether. In 2021, there's going to be a burn mechanism introduced. This is an improvement proposal on the Ethereum network called EIP 1559. And basically what this means is every time somebody uses block space on Ethereum, they do a transaction, a percentage of the payment that they're making, and of course they have to make their payments in ETH, a percentage of that Ether as payment gets actually burnt by the protocol, right? There's lots of reasons for this. It's going to improve the user experience of like transacting on Ethereum. But from a store of value perspective, this is deflationary pressure. This is like scarcity pressure. So instead of having fixed cap of 21 million, you could also you could see Ether if Ethereum's being used a lot with actually negative issuance year to year because a portion of that's burned. So that's happening in 2021. And outside of the Ethereum community, like no one's talking about it, right? This has the potential to be more scarce on an annualized basis in some ways than Bitcoin. No one's talking about it. And then in 2022, what's going to happen is some of your listeners may have heard about the ETH2 launch, right? So like it's kind of like a separate chain with proof of stake, but the same shared asset. In 2022, the old proof of work chain, ETH1 as it's called, and ETH2 are going to be merged together, and proof of work is going to completely go out the window. It's no longer going to be necessary. And so what that means is Ether year-to-year issuance is going to drop from about 4.5% where it is now to like 1% or even below 1% into the negatives, depending on what the fee burn looks like. So these three catalysts are coming up. Like 2020, we saw a bond, the ability to bond your ETH. In 2021, we get the ability to burn ETH essentially. And 2022, we have the ability to like bend the issuance curve, right? So bond, burn, and bend next 3 years. This is an incredibly bullish catalyst for Ether, the asset. And all that's left is essentially for institutions to understand it. Right. So like they understand Bitcoin, and that's kind of the gateway drug. OK, they get their minds wrapped around digital scarcity, digital gold. Next, they're going to understand Ether as an asset. And I think that's part of the huge bull case for why I think Ether is like 5x relative to Bitcoin right now.
Well, you've immediately ended with an answer to my follow-up question, which was going to be all these changes, as you explained them, make it sound like it's going to serve a lot of what Bitcoin does better. Especially with the burn as you exchange Ether. So the more people use Ether, the more deflationary it becomes. That sounds extremely powerful and almost exponential in terms of what could happen to the price. And so you believe the reason institutions aren't already targeting something like Ethereum is because they're just slow. They're just learning crypto, and Bitcoin's the first thing they've learned. At what point will that transition to Ethereum? Is that when more changes come out, or just however long it takes them to learn? And if they knew right now, they would be buying Ethereum over Bitcoin.
I think that it's probably true that Ether is a cycle behind, but not a full cycle behind Bitcoin. So there's an element of Bitcoin is kind of to institutions Ether is to institutions what Bitcoin was in 2015, right? It's kind of this thing that is out there, but they don't really understand it. Is it like, what is it? They don't understand how to buy it. There's not necessarily the infrastructure to buy it. But I think because of Bitcoin, Bitcoin has kind of macheted its way through the institutional jungle, right? And then Ether can essentially just follow that path. Like, thanks a lot, Bitcoin. Like, we're just coming behind you. You've done some of the hard work here to get institutions to understand and invest in this. So when I say a cycle behind, I actually think it's moving at an accelerated pace, so it won't take as long as Bitcoin did to get into institutions. So like the net of your question is, when does it happen? This cycle. I think it happens this cycle. Like we have CME futures coming to Ether February 8th, right? So that's, I don't know, like our 15, 16, 17, like a few weeks away, that's going to happen. That is necessary infrastructure for large institutions to take positions out on Ether, right? Ether being deemed a commodity in the US, that is hugely important for institutions. Only Bitcoin and Ether have that designation. Like nothing else is going to be listed on CME futures, very likely this cycle, at least like not early in this cycle. So I think the institutional interest and the story is going to pick up this cycle. I think they have to wrap their minds around Ether right now as a internet bond, as a yielding instrument. And once they do, like it's going to, they're gonna be all in the same way they have been with Bitcoin. So like the narrative is Ether as an internet bond, exposure to DeFi. So it's like buying like an index, and the narrative, quite frankly, is an alternative or a better version of Bitcoin, right? Yeah. And so I think that's going to be the catalyst for this entire cycle, and it's going to happen this time around.
I absolutely loved your analogy of Bitcoin being like the older brother that's fought all the battles with the parents, and the younger brother just gets all those hard-earned liberties which the elder brother had to suffer for. And I can definitely see it playing out as a narrative. Everything you've said makes perfect sense, but we've only seen one half of the argument right now. Ryan, I'm sure better than anyone else, you'll be able to tell us what could go wrong. What are the strongest arguments you have against the success of Ethereum and this beautiful roadmap playing out?
Yeah, so all of these, any bet you make in crypto has got to be a probabilistic bet, and you can't get overly religious about it. I am like bullish on Ether as an asset, but like that could change. Circumstances could change. I'll tell you some I guess, bearish things I thought about Ether, and like give you an update on that. There was a time where I thought DeFi might not work, or might be just a niche, right? This was back in 2017, 2018. There was DeFi as a fundraising tool for ICOs, but there was nothing actually useful being built on Ethereum. That was a concern that I did have. I no longer have that concern. Like 2020, we saw a thriving DeFi ecosystem, and so much is getting built in this space. Like checkmark box, DeFi has product market fit on Ethereum, okay? Another thing I was worried about is would the Ethereum development team actually be able to ship ETH2, right? In 2017, they thought it was coming in 2018 or 2019, right? And it still hadn't shipped. So it took much longer than everyone thought. But with it shipping, ETH2 shipping with proof of stake, the network has performed flawlessly since December of this year. I no longer have that concern either. So those are two things on kind of the what could go wrong probability list that have been checked off. But there are still a few other things.
So before you continue, Ryan, and I'd love to hear the other ones, that definitely felt like the job interview answer of, hey, what are your weaknesses? I'm a perfectionist.
These were weaknesses, I think, and they're not any longer, but there are still some possible weaknesses. So one is basically that crypto banks kind of win and DeFi loses. What I mean by that is if you look at how Bitcoin is scaling, it's not really scaling with Lightning right now. It's not really scaling on its layer one. It's scaling with what I call crypto banks or crypto institutions. So these are like exchanges. Exchanges started as just trading facilities, but now you see them introducing like the ability to do lending. All exchanges have credit cards. Like I use my Coinbase account more than my traditional bank account right now because it's really useful in this world. So these exchanges operate as crypto banks and are almost side chains to Bitcoin, and they compete against DeFi, right? Like Uniswap competes for trading volume against a Coinbase or a Binance. and they'll also compete in, staking, all of these other things. So if people don't really care as much about decentralization, or if DeFi doesn't bring the value proposition that I think it will, and people are fine custodying their assets in trusted crypto banks like a Binance or a Gemini or a Kraken or whatever, then it's possible that DeFi doesn't pick up and Ethereum kind of loses. And Ether is not able to be a store of value money. Like Bitcoin just eats that use case. It is the reserve currency for these crypto banks, essentially. So that's one scenario playing out. Another scenario under that umbrella of like people don't care about decentralization is part of the value proposition of Ether on Ethereum is that it is trustless, a very pure. It doesn't require any kind of institutional or state trust, basically. But we see stable coins on Ethereum, like a USDC or even a Tether. These are like bank issued, trusted stable coins. They don't have the decentralization properties of Ether. Like Coinbase can basically freeze your account or blacklist your account if you have USDC on it, right? So it's not truly a crypto native, value that's being transferred. It's possible that people are fine with that. Like, they're not worried that Coinbase is going to freeze their funds, that USDC becomes essentially the primary mechanism for value transfer in Ethereum and sort of erodes Ether's monetary properties away. Those two scenarios, I think, could play out. And it's like all under the umbrella of decentralization doesn't matter as much as I think it does. That's where I could be wrong, and that's where like Ether as an asset might underperform if those kind of scenarios play out.
I really appreciate you sharing those examples because everyone should be aware of both sides of the argument, specifically with regards to the exchanges taking over and sort of playing the role banks already play in society. That feels like jumping out of the frying pan into the fire. So hopefully we don't get a situation like that. There's one other potential scenario which I could think of, and I'd love for you to comment on, is if something comes along that's deemed either better technologically wise or more popular than Ethereum. There's plenty of so-called Ethereum killer applications out there. Which one do you think could potentially do that, or is there any that comes even close?
I always have kind of the ETH killers on my radar, right? But I actually think they are overplayed as a threat to Ethereum or Ether dominance. I actually think that more of the competition comes from Bitcoin plus crypto banks or a Bitcoin plus some sort of smart contract layer. And the reason is, I don't think that these ETH killers, like, first of all, they're all kind of competing against one another. So it's a very crowded place. It's going to be difficult for them to build network effect. But secondly, they don't really have a clean path towards making their underlying asset a monetary instrument, a store of value. So almost all of these ETH killers have been kind of VC launched, right? So accredited investors. Doesn't have a pure launch in the way that Bitcoin had one, or even Ether with kind of a totally permissionless, anybody could join ICO. Like those aren't possible now. A lot of these other ETH killers aren't even trying to compete as monetary assets. So if you talk to like the folks at Cosmos, for instance, they'll say, oh yeah, Atoms is not trying to be money. Like Bitcoin can go be money, maybe ETH can go be money, but Atoms, the asset, are not trying to be money. A lot of these chains have on-chain governance as well. So this basically means that if you hold the asset, you can do some sort of like a shareholder vote and determine the next step for the development or like make decisions on chain. I don't think monetary assets should have shareholder vote. Like imagine if Facebook introduced a store of value asset and Mark Zuckerberg had the ability to like control issuance around that. Like that's not a credibly neutral money. And I do think that at the end of the day, to compete against a Bitcoin or an Ethereum, the underlying asset of your chain has to be more than like kind of an equity type instrument. It has to be a monetary instrument. It has to have a credibly neutral issuance and monetary policy. And Bitcoin definitely checks the box, and Ether checks the box if you look at it through the way I look at it. But none of the other chains do. So I don't really see much of a threat from that angle, though there's lots of clamor, and I could be wrong. And if I'm wrong about this, it'll be because I'm overplaying the need for the asset to be a money. I could be wrong about that. Or it could be that there's other paths to an asset like a Tezos or something, or dots on Polkadot to becoming money that I don't fully see yet. So that's why I'm keeping them on the periphery and sort of seeing what happens this cycle.
You have a very balanced view here, which I appreciate. I know our listeners will appreciate as well. Ryan, the next question I'm about to ask, feel free not to answer if you're not comfortable answering. What is your personal split between Bitcoin, Ethereum, even rough number percentages, and say DeFi assets or other projects you're excited about?
Yeah, so for me personally, I'm definitely overweight Ether, right? But I'll give you kind of the answer that I would. This is not financial advice, but like if a friend asked me, right, how should they gain exposure this cycle? If you're not a trader and you want to hold across, let's say, multiple cycles, right? So not only this cycle but also the next, and you're comfortable with that volatility. If price comes crashing down, you're not going to sell out of everything, right? So if your time horizon is 3, 5, 10 years, here's what I would essentially advise. First Bitcoin, you want to have a good portion of Bitcoin as an underlying crypto money. So, and then also Ether. So those are the two assets that form kind of the base. This is the new money of this bankless money system, and you want to have exposure to those as store of value money sources. So that's number one. That should compose call it 60% of your portfolio, and how you split that depends on how bullish or bearish you are on Ether versus Bitcoin, right? So I would probably split it 80-20. I would do 80% Ether, 20% Bitcoin in that 60%. Others would flip that, right? Like Raoul Pal, we had him on the podcast. He's kind of split the other way. He's 80% Bitcoin, 20% Ether. But I do think Ether is going to overperform this cycle. We'll see. I could be wrong about that. So that's the basis of the portfolio is like crypto monies, crypto native monies. You could even speculate on some other layer one assets that might become crypto monies if you want. I don't personally. And then the next section of your portfolio, I really like DeFi protocols as an asset class. So it's hard to gain exposure to crypto banks, even though they're going to be large. We have to wait for Coinbase to IPO. They're going to do that this year. Then you could buy Coinbase shares in the open market. You could also buy BNB, the Binance shares, but that's sort of a pseudo equity kind of thing. It's, I don't even know what that is. The loyalty coin. So that you could do that. But I really like instead investment in sort of the DeFi protocols as maybe 30% or so of your investment. So if you have 60% crypto monies, 30% DeFi protocols, a really easy way to do that is just to buy an index of DeFi protocols. So there's something called the DPI token set puts this out, and it gives you exposure to the top. It's an indice of the top 10 DeFi tokens. That's a nice way to just set it and forget it. Or you could speculate on some new DeFi projects that are amazing. And then 10%, just keep in dry powder. So 10% stable coins, for instance. There's lots of ways to earn yield in crypto. So you can park them in a yield generating account and use them for dry powder for purchases. So 60% crypto monies, 30% DeFi protocols, indexes, and 10% dry powder. Stablecoins is something that could be appealing for somebody who's got a longer term time horizon, is just entering now.
That was far more detailed answer than most people give, which I love. It means you've clearly thought about it a lot, and I'm sure you've had a lot of friends ask you as well. Neither of us will be strangers to that. One specific part I'd like to ask more about is the DeFi index. I've actually always been fascinated by indexes. I didn't even think anything but passive investing was something people should do before 2017, where I got dived deep into crypto and started experimenting with trading and more active investing strategies. But one thing I did always do is try and bring indexes to crypto. And I noticed in the early stages that taking, say, an index of the top 10 cryptocurrencies would have been far less profitable than just focusing on Bitcoin. And this is because the churn was so high. The top 10 hardly ever stayed the top 10. They would change so much. And given that, isn't DeFi in a similar early stage, and therefore isn't that index subject to enough churn to potentially make buying an index not the best decision, especially with such a big allocation of 30%?
Yeah, so I think you've got some points definitely on the index, right? So if you zoom into the index, the problem with it is you're not capturing the upside of all of the micro cap type investments in DeFi, right? And that's where a lot of the growth is going to be, and a lot of the value is going to be generated this cycle. That said, there's something nice if you're not a trader, and you don't want to worry about being rug pulled, or some like exit scam, or some smart contract hack with these newer DeFi protocols. There is something nice with just being able to park your money in an index, not have to worry about it, right? So I do think, like, if I were to just roughly heuristic, right, Bitcoin might have a 4 to 8x this cycle or so, maybe more, who knows? Ether might have like a 5 to 10x this cycle. I still think even an index has a 8 to 15x on, like, potentially, right, on the DeFi side of things. But if you want to trade, and if you want to play around in DeFi, and you want to actively manage things, then definitely there's more value to be generated on DeFi than just an index. So it depends. Like for your listeners, maybe they have that skill set to kind of trade and to get in early on projects and to navigate, like all of these risks. And if they do, I definitely think you can outperform a DeFi index this cycle.
So with the microcaps, actually, firstly, most of our listeners are aspiring traders and investors, but the success rate of people who can generate money long-term trading is pretty low. So I always like to advocate that people don't trade until they have some sort of data backing their performance, some sort of edge in the market. Specifically with DeFi, I think more so than the charts, it's networking and fundamentals that really get you the right piece of information. You need to know the right people working on the right projects, people who are deep in the industry, who can see these trends before they happen, because they're such early stage assets that it's hard to make any sense of the price data. Like, your chart is not going to tell you it's about to go 1000x. No chart does that.
Yeah, so the way I break up, crypto investing is in 3 categories, right? So you have one is kind of the trading, and you do that with like technical analysis and the skills I'm sure you're sharing, right? And like that's one path. The second category is narrative investing, right? Where you're looking for what's going to be the hot new narrative that's going to essentially pump these assets this cycle. That's what you're doing. And if a trader looks on a shorter time horizon, like weeks, a narrative investor might look on a little bit of a longer cycle, like months. Like, what's going to be Q1? Tell me what's hot this quarter, right? Is it going to be algorithmic stablecoins? Okay, well, I should look at empty set dollar, like I should look at Frax, all of these like algorithmic stablecoins. So there's narrative investing, and then there's lastly fundamental investing, right? So what we do at Bankless is that last category. That's where I was sharing, like, that basic portfolio of crypto monies plus a DeFi. That's like fundamentals investing. You do that. It's like a Vanguard group like way to play the market over the long term. But what you're talking about, I think, is this blend of like trading plus narrative investing. And I do totally think that there's a lot of upside for people who get good at figuring out through networking, through like diving deep on these projects, figuring out what the next narrative is going to be. Like, look at DeFi summer last summer, right? If you knew in May that all of these projects were going to launch like fair launch governance tokens, and you got ahead of that trend, you had a pretty good summer, right? And so if you're narrative investing, the question is, okay, what are the popular narratives going to be in 2021, and how are they going to play out, and how do I get exposure to those? I don't do that as much, but it could be very profitable, I'm sure, for many folks who do.
I love the way you've put it. And Ryan, I'm going to take that. I'm going to use that a lot. Narrative investing. I absolutely love it because it sums stuff up so well. I mean, the reason 2017 went so well for me was two major plays. The first one was ant shares and the only reason, Chinese Ethereum. That was it, because of that little narrative. And then the second one, which I managed to get in at ICO, was Korean Ethereum, ICX. And that was it. Honestly, that was it. And this time round, I was targeting DeFi and Polka. Anything that had like Polka at the start and then something else, it didn't even matter what it was. That was the narrative which people would gravitate towards. And I even tweeted about it as a joke. Hey, I'm going in on this, not even a joke, like a serious tweet. I'm going in on this project because it's early stage. It's got Polka in the name, and it's got something to do with DeFi as well. I think it's going to explode. It's that easy. It really is. And then the challenge becomes, like with regular trading, not the technical analysis or getting the entries, but the managing of the greed, the managing of the risk, and actually taking profit, reducing your exposure, making sure you're not going to have to pay debt and liquidate all of your crypto.
Yeah, and I think it's really important for people to figure out what type of investor they are, because it's very hard to be all three things at once. You can, but it's hard. You have to develop three different skills. I do think narrative investing has, in a bull market cycle, the best probably ROI, right? But like you can get caught on that too. If the narrative dies too soon and you're not selling, like, you can't
just left with narrative expect. That's a great
exactly
point. Thank you for bringing that up.
Yeah, and one way to do it, possibly, it's like, I know many people who do this, is bundle things in different buckets though, right? Like, so you have your long-term holdings, and you're looking at like, okay, I'm going to treat this with fundamental type of approach, and then you have your play money for like narrative investing and trading. I've seen some people do that, and it works out quite well for them too. But you have to, like, you don't ever want to start doing narrative investing with your long-term holds. Like, I think that gets you in trouble. Anyway, there's different approaches to it, but it's important for somebody approaching this market to understand what type of investor they are, and like that guides their strategy for everything.
Humility can help a lot. Just really accept the fact that you don't know. There are too many variables at play. So find your isolated variables which you believe in, or just diversify, and that seems to be the best way to go at it. Like you've said, Ethereum and Bitcoin are your main focuses, and I actually think that is as close to diversified as you can get in crypto. Bitcoin, it's the benchmark, it's the index, it's the biggest market cap, so that's pretty much attached to the success of the industry. And then you've got Ethereum on the other hand as well, which, while it's not really an index of anything, so much is being built upon it and reliant on it, and it's also going in to become a store of value and potentially push those arguments as well. It's almost indexed out in and of itself as well. So Bitcoin and Ethereum kind of gives you that long term for crypto, and it's probably why, and correct me if I'm wrong, forgive me for leveraging you as an example, you stick to Bitcoin and Ethereum, and then DeFi you just view as this more basket category. Yeah,
that's right. I do think that, look, I do think that this cycle is going to play out a lot like the previous cycle, to be honest, but in different ways too, right? So last cycle was ICOs and Binance. This cycle, I think it's going to be DeFi tokens and Uniswap, for example. So it is important for folks to level up their skills in like even using DeFi, using Uniswap, for instance, even if they want to engage in narrative trading, because I think that's where a lot of the activity is going to be this cycle. But we'll see. It's always fun. It's always interesting. There's always surprises. So we might all be surprised by what happens in this bull cycle. Some people don't even think we're in a bull cycle. I don't know.
I don't know but how you can get to that conclusion right now, given what's going on in the market, parabolic rises across the board. Ryan, one other thing you might not know is a lot of our listeners absolutely adore Chainlink as an asset. And loads of people say that, this is my personal view. The only thing I've added in my 2021 bag, which you haven't mentioned, is I've got Bitcoin, and that's my primary exposure for the sole reason that it is the highest market cap. So from an index point of view, it makes the most sense to me. Then we've got Ethereum as well, a much smaller exposure than you. I'm closer to that 10% mark. And then I've got DeFi exposure as well, and Chainlink. I view Link similarly to the DeFi exposure, just because it's so connected to so many different DeFi protocols right now, and so much is reliant on it. What are your thoughts on Chainlink? Do you have any exposure? Have you looked into it?
Yeah, so some people would bucket Chainlink and Link specifically in the kind of the DeFi index bucket. Actually, the DPI, which I was talking about, does not include Link, but other DeFi indexes do, right? And you can see Chainlink being kind of an oracle for so many things across DeFi, even other chains as well, that I could understand how you draw that conclusion. When I think of different assets, I think of, again, less narrative and more fundamental investment. And I think Link has one of the best narratives as an asset in this space, like one of the best, and they've got a community that actively propagates that narrative. So as a narrative investment, I totally get it. From a fundamentals perspective, where I struggle is I think ultimately these DeFi tokens are going to need to be capital assets. That means they're going to need to produce cash flows. So something like Uniswap, for instance, the Uni token, it has cash flows, or it could conceptually have cash flows. You just take a percent of all the trades on Uniswap, the billions of volume that go through Uniswap, and you give that to Uni holders. That's cash flows, right? It's too early for me to see that on Link right now. Like, it's hard to model as a cash flowing asset. I know there are people who can do that or try to do that. But that's why it's harder for me from a fundamentals perspective to get behind it. But I totally understand it from a narrative perspective. So again, it's all about your view of the world and what type of an investor you are.
That was another beautifully balanced view, and similarly to why Link caught my attention in the first place was just purely on the technicals. The trends would overextend tremendously. It was unbelievable. So the second Link broke its $4 all-time high or key resistance previously, I was like, okay, time to jump in on this asset and just leverage long as much as I can consistently.
Yeah, and I will say, you might have been talking about trading technicals, but actually from a technology perspective too, Chainlink's got a great solution. So there's definitely some hard tech there that is real. So I see that side of it too.
Yeah, for sure. But there are a lot of arguments as to why that isn't necessarily attached to the token, like you said yourself. But so the Link Marines won't come after your neck after your response. I think that was sufficiently balanced.
Thank you. We don't have to cut anything then. That's great.
No, we're totally good. And on that note, Ryan, I think this has been a terrific episode. I've really enjoyed it. I've learned a lot, and especially towards the end, talking more about topics I'm stronger on with investing and trading, hearing your perspective. It was fantastic. Whereas on the Ethereum end, it's a lot harder to keep up with you there. So thank you so much for your time. It's been really enjoyable. Is there anything you'd like to leave our audience with before we wrap up this episode?
I'd just say, enjoy the cycle, guys. This is a bull run. You're still early. It's going to be a lot of fun, and wherever possible, start using these crypto protocols in your everyday life. So, go Bankless.
Go Bankless, everyone. Thanks for joining us again for another episode of the Market Meditations podcast. Until next time, market meditators. Thank you so much for tuning in to another episode of the Market Meditations podcast. If you enjoyed this episode and you'd like us to continue bringing you fascinating people from across the world, please leave us a review on Apple Podcasts, Spotify, or wherever else you like to listen to these podcasts, and share the episode with a friend. If you have feedback or an idea for a potential guest, reach out to me on Twitter at 𝐉𝐸𝐴𝐾, and do not forget we write a newsletter covering all important topics in crypto and traditional markets. We send it out 3 times a week. The Market Meditations newsletter. You also get early access to these episodes, and you get transcripts and extra notes as well, so make sure to subscribe there as well.